In support of our goals and in light of the shift in the balance of risks, today. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. We did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share. It is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you gotta be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals.
The stock market's doing more or less what I would have expected. We didn't get the 50 basis point cut, which would have been a shocker. We got exactly what we expected. We were at these similar levels before the Fed announcement. We got a little bit of a spike right after the announcement. We got a sell-off, which is what I would have expected. Buy on rumor, sell on news. Everyone in the entire world knew this 25 basis point cut was coming. It was about a 97% probability. But the bottom line is that just moving forward, what are we seeing? Mortgage rates are coming down. We just had a record amount of refis that we haven't seen in a while. It means people are going to reduce their monthly mortgage costs, more money in the consumer pocket. And that translates to corporations. It's across the whole economy. I do think that you have to stay bullish.
Basically, the market believes there's above 90% chance that the Fed is going to cut rate for 25 basis points. So this is very well expected. And the focus of the market is basically on the path forward rather than the 25 basis point. Growth is slowing down, but at the same time, the situation is not too bad, I would say. Yeah, we still see the unemployment is still relatively low. Demand of jobs slow down, but also as Fed Chair Powell mentioned, basically the supply side is also driving this, right? Because of this immigration slowdown in the US.
Well, it's surprising that it's taken this long for the Fed to continue its rate cutting program, but it's an encouraging sign because the second year of rate cuts tend to be encouraging for stock prices. It is a risk management cut, but at the same time, because the Fed is likely to be cutting rates again in October and December, it's an effort to put a floor underneath a cooling job market and thereby reduce the risk of recession.